talk about earnings. What are you expecting going into earnings? Sachin, we heard from you last week, but you can reiterate your thoughts. Dom, what are your thoughts?
Well, I saw some alarming news in our little Twitter forum that they still have a lot more SPAC drawdowns to report on. So if it's worse than last quarter, which everyone said it is going to be worse, I have a feeling we're going to be able to get a really good price for Palantir stock, and that's why I'm waiting, because I do think they blow out the revenue number, but with how they operate with stock-based comp, unless they somehow really, cut it tight all of a sudden out of nowhere, which I don't see them doing, it may decrease a little bit. We're going to see another negative net income report and a miss on earnings, on the earnings piece of it, on expectation. And I think that right now you have to be flawless to get a successful bump from earnings.
So, let me share. So, first thing, I heard a lot of time these views about like people worrying about investments Palantir has made in a spec. So, has these investment lost value because the company's stocks have declined? Yes. Do Does Palantir have to report it? No. The reason is like it depends what kind of accounting you are doing. If your accounting is mark to market, that means you update your valuation based on every quarter you report. Companies normally don't do it because the first thing is that if you do mark to market, you declare loss today. Tomorrow you have to declare capital gain when they come back, and you declare loss when you have taxes to offset. So gap accounting in US actually allows you how you are going to follow until and unless you are consistent with the accounting thing. So you can mark them as cost and you can mark them as market, but you have to pick one thing and you have to stay with it. Since Palantir has not done this in past, it is my view that Palantir is doing mark to cost. Okay, so Palantir don't have to book these losses at this particular point until and unless they liquidate their position or they take a position to exit in any other way up there. So there is a loss. Yes, there is a loss. There is a paper loss at this particular point. Is Palantir going to take it on their income statement? I don't think so at this point. I mean, I could be wrong, but that's how I think. The
But they
second
did
thing
take
is,
it last quarter, right?
so you take it when you are changing your position in the company, you're liquidating something here and there. Okay, so that is, and you take it when you have taxes to offset. It makes sense to them.
But
Okay,
we
whatever
have
you
no
do, you
clue if
have.
they sold, right? I mean, it'll be a surprise either way.
Yeah. So I mean, it's a position that they need to make up. The second thing, I think, the only two things you have to worry about Palantir at this particular point is, the first thing is the how fast the revenue is growing. Okay, and this is one thing I have stressed long way. As long as you have cash coming in, you can always become efficient. You can always turn around numbers around it. So revenue is the most important number that we should look after. And I mean, I would love a quarter that is more than 500 million. I'll be honest with that. The second thing is, which is very important in case of Palantir, since they do not have that, how healthy they are in terms of cash flows. Okay, we know that there's a drag in terms of SBC, and that is going to stay for another 4 to 6 weeks. But cash, okay, that means if they are doing SBC, they are not spending that cash. So how they are deploying that cash back into their business to generate more sales, that is more important for us. So cash and revenue are the two most important things. As long as these two things remain healthy, company has a lifeline to turn things around. If cash and revenue are not healthy, then it doesn't matter how every metric look like, how good the earnings look like. There is a matter of concern. And that is how all of these software companies, be it C3AI, be it Snowflake, I mean, you need to see what their debt levels are, what their free cash flow look like, what's their operating income look like, what their revenue look like. This is how you look the SaaS business. Okay. See, people focus on earnings, but see, earning is a product of a formula. If you understand the inputs of the formula, you don't have to worry about what the PE look like, because then you understand different dynamics that goes in there. So I look for free cash flow. I will look, I mean, their debt position is literally nil. I will look for their revenue. I would love for them to increase their revenue rate now. That is one thing which, if that doesn't happen, I will raise flag on that. Back to you guys.
Yeah, I agree. I mean, they might have to. I mean, we'll see if they end up selling up some of the SPACs, and that would hurt us on the EPS and the overall losses they have. But if revenue growth is good and cash flow is good, regardless of what the market thinks, if we go to $6, $5, that gives them a chance to turn things around over the next couple of years, especially when the macro gets better, which that's what I'm waiting for as well. I mean, I didn't buy the last time I hit 6 because I thought it might even go lower. Now that it's backed up to 9, 10, I'm like, I just don't feel like it yet. So if we get back to those levels, I would be more excited. If not, then no. Amit has had one too many Red Bulls. No, I kind of like, I don't know, my legs shake sometimes just for fun. I used to do that since I was little, but I don't drink Red Bulls.
So Sachin, to your point about the free cash flow, totally agree with you that free cash flow, low debt or no debt, and high revenue growth, key recipes to success. Looking at last quarter's free cash flow growth, it was negative 83% if we round up, due to the investing cash flow hits that they had to with the reporting on the drawdowns on the SPACs, along with the $150 million of share-based compensation. So their free cash flow margin was 4.5% versus the last two previous quarters at 20 and 24. So are you looking then for an expectation of back into the 20s and no investing drawdown and less SBC?
I think we saw that even the last quarter, the SBC was high. So, I mean, it will not reduce dramatically this quarter as well. I mean, that's so SBC number, there will be a trend, but it will still stay high. The free cash flow is something at least I would expect in double digit. Okay, if not 20, at least 10%. The operating cash flow is more important at times because that's a cash that has actually been generating, but before you make any adjustment to it. But yeah, I mean, free cash flow at 4%, even with all the adjustment, is not a good number to look at. Okay,
Yeah,
I mean,
I would agree.
See, you invest in why Google became such a big company, why Microsoft became such a big company. I mean, because they generated a lot of cash, they generated a lot of free cash flow. I mean, if you followed Microsoft from 2000 to 2012, I mean, the company sucked. The culture sucked. I mean, they didn't produce they produced Zune in that time. They laughed on iPhone. They missed the whole Windows operating system thing, the tablet thing. But they generated a lot of cash because of Windows and because of Microsoft Office. And because they did it, I mean, I remember there was an article and I wrote a paper during my MBA also. I mean, like different things like why Microsoft missed that decade. See, if you were in 97, 98, you know what was the biggest fear Microsoft has? They never wanted a company to become as big, any other company as they are. That was their fear. And that's how they never expected Apple to become bigger. But you see what happened in that decade. Apple became big, Google came in, Facebook came in. So Microsoft made a lot of mistake in that. But they were generating a lot of cash. And since they were generating a lot of cash, they were able to turn around the company. So in software business, you can optimize cost in a lot of ways. And a lot of time people focus too much on margin also, and that is good. But that is most important thing. I think this is one of the things that Jeff Bezos highlighted in one of his interviews in 90s is, see, margin is good, but what is your cash cycle timeline? That is more important. You generating 5% over 30 days, or you generating 4% over 15 days, and then you generate that 4% again over that 15 days. So the cash conversion cycle, the DSOs, these are, I mean, Dom is a sales guy. He knows the DSO is quite an important number when it comes to, I assume this number has increased recently because they said that a lot of money they are having with the government contract, especially in Ukraine, has not been paid. But at the end of the day, it is important that the company has to generate a lot of cash, and their cash generation has to increase at a very fast pace. If that is happening, why Twitter sucks today? They generate 5 billion, and all of the money they generate, they spend on the employees. I mean, it's running like a charity at the end of the day. I mean, it's not running. It's just we have generated this much value. We have generated this much. I mean, from a corporate governance point of view, from a shareholder point of view, Twitter is a disaster. And the leadership there, and they just think, okay, we need to run this company so that we just stay afloat and we get our salaries and we get our. But that is not how a software or social network company should run. Why Facebook is so successful? Facebook generates a lot of cash.
112 billion in revenue last year.
Yeah. So
So-
think about it. So that is
Just
why, I
put
mean,
it-
that's what Palantir has to do. They need to generate a lot more cash.
and not to play, well, kind of to play devil's advocate. We talked about how you all in with Palantir, no Snowflake. I think your portfolio is a lot bigger from a overall dollars and percentage, so you can do that. But I'm a little more diversified, and so I do have a little bit of Snowflake, and I've been thinking about building it. And you look at their last 2 quarters. So 2 quarters ago was 18% free cash flow margin. Last quarter was 41, almost 41%.
See, if you have to pick companies entirely based on number, you will always pick Datadog and Snowflake. There is no company which is doing better than them in terms of numbers of revenue growth, in terms of beating expectation. And these 2 companies are way better in terms of numbers, at least in terms of, not, I'm not saying the valuation of the stock, but in terms of how their numbers are coming up, the growth at which they are going in. The question for you, and this is where every investor is different, that you want to pick companies based on past performance, or you want to pick companies based on leading indicators.
Oh no, I agree that
No, I agree. I mean, don't get me wrong on that part. I mean, I totally agree with you, and that's what I said. I mean, I love Datadog, I love Snowflake, and
I just
there
want
are a
to
lot
hedge.
of things.
For me, I want to
Yeah.
hedge. So it's like, okay, majority of my portfolio or highest percentage is in Palantir.
No, that's absolutely fine. I think that should people do. I mean, I've discussed this in past. Like, my risk appetite is a bit different. I mean, like, when I don't invest in companies, I get obsessed about companies. That is why I cannot do it for a lot of companies. It's, you need to turn your weaknesses into your strength. Okay, but when you do that, the challenge what happen is, see, every stock has 3 risks: the market risk, the sector risk, and the company risk. When you diversify, like for example, if you have Snow AI, Datadog, and Palantir, you have diversified the company risk,
Don't
and
forget
that is
NVIDIA.
perfectly okay. And I mean, Palantir is a company with a very high risk. In my case, I am exposed to that risk. Okay, so this thing could burn me also. Okay, so that's what I said. You need to figure it out what works for you. And I'm Dom and I had like great discussions. We had like Zoom calls sometime over for hours, not on YouTube, but with each other. I mean, and you have very good eye selecting company. I mean, I have to say, I mean, I learn a lot from you.
Oh, likewise, man. I'd have to say right now, and you guys hear me talk about it all the time, but the best, in my opinion, company hitting on all cylinders possible is NVIDIA, and then AMD right under there. And what's so compelling with those two is that they're now getting into the software game, but they're also creating such advancements in hardware. And the one thing that you're always going to need to create data is compute. And both companies generate a crap load of free cash flow.
Sachin, is one of the reasons you're so into Palantir is because you missed on Tesla?
No,
If you
because
did,
I missed
I
on
don't know.
Tesla. I mean, I missed on Tesla, but I loaded SpaceX early. So
No,
I mean,
but like as a public stock, right? Tesla and had its the logic. I remember you told me in our first call in January was traditional MBAs kind of didn't understand Tesla and the logic
Yep.
behind it, and they're also missing out the same way on Palantir. And because you miss Tesla, I miss Tesla. Is that kind of the reason you don't want to miss Palantir, because you see it in that similar vein of a potential flat for 10 years and then this super boom?
So I mean, I have to say, I mean, the decision a bit implicit. Like every investment you make, good or bad, you learn. So missing Tesla earlier and not taking that call, of course, that has contributed to somewhat. But when I made the decision about Palantir, Palantir is a different kind of company. So I wanted to figure out company. I was trying to see. Remember that when I was doing my research in 2020, I wanted to see like whatever is happening, what the world will look like in 2030, and what kind of companies that will succeed. Okay, so that was one of the biggest frame I had, and I mean, data AI was a big thing. I missed. So the one company which I invested specifically, like when I missed Tesla, and I kind of got along with it. I said, okay, I missed Tesla, I want to get in, and I actually took a position in Tesla also. That time was, but I said, what is this company today that is going to be Tesla in 5-10 years? And that time, like SpaceX and Palantir were 2 of the companies that came out. I mean, I'm a consultant. I built a lot of. I'm a director with the fund, so I value and I spend tons of time and building models in terms of due diligence and all that. So I build a framework for myself, and these two companies actually came out of that. So I invested in SpaceX first because I wanted Palantir, but I was not getting to position in Palantir before it came to public. So yeah, when it came to public, I took the position in. So yes, there are. So this is what you learn, but it doesn't mean you miss one, but that you should go in other companies, and that is what people have made mistake when they missed Tesla. They went in Nikola Motors, and every time CNBC will say, "Oh, if you like Tesla or if you miss Tesla, why don't you see this stock? Why don't you see that stock?" Please, guys, please
Right.
don't do that. You need to understand what you knew in 2013 that could have led you to decide to invest in Tesla and what risk you would have taken that time. If you are deciding about investing in Tesla with the hindsight information, you are never going to find another Tesla.